All right, what's going on, everybody? How's everybody doing on this fantastic Thursday morning? We're going to take a look at some assets, see if we can't find something to trade. We got Bitcoin having a great day yesterday, but if you bring up the actual market watch here, you can see basically everything in the whole entire world had a good day yesterday. So that's everything pretty much. Your S&P 500, S&P 100, NASDAQ, Russell, Dow Jones, everything doing good yesterday. So yeah, we got a couple assets breaking out like Amazon, Nvidia. They were pretty much just like 10 stocks holding up the entire stock market. But as long as we get a lot of stocks green like that, that would absolutely cause a nice bullish move. However, Bitcoin is at a resistance level, a very important resistance level. Let me get this down here. Good morning, ledges. All right, so if I take off the candlesticks, put on the line chart, basically you can see here you got this little downtrend or descending trend line, and you have an old swing low here, which is also weekly support because the lines are calculated on the closes. So anytime you have a swing in the line chart, that's essentially your close, depending on what period time frame you're looking at. This is a weekly. So you can see here that you do have a form of resistance coming up. You got a core, shoot. Would you be quiet, Pepe, please? Anyways, you got confluence, right? You got some confluence here. So let's switch it back to the candles, and you can see on the weekly with that little wick right there, boom, you've already tagged it. That is old weekly support. That is where you are finding resistance. All right. Why doesn't it show that on the daily? Oh, right there. All right. So anyways, We got this coming up right here. We have old resistance. I don't know if Bitcoin will hold here, but it is a decent spot to look for potential entries. My only problem with it is the intraday's price action. The point of control is up here, so that means there is more selling than buying going on, and it's natural that you will have more selling than buying going on after a nice rally when an asset on the near term is in a downtrend, and this asset on the near term is in a downtrend. If you pull up your moving averages and look where your 21 exponential is, you can see that this baby is trending lower, right? Trending lower. Typically, as day traders, or me anyways, not, I can't say all day traders, but me, whenever we get on the opposite side of this moving average price, then I look for that direction in my day trades. So essentially, but when I'm looking to buy an asset on the longer term hodl, then I will switch to the weekly and use that bias. The market is open, so let's see what happens. But anyways, you can see here, there's the 21. You're still clearly in an uptrend. There's your yearly opening range. You're above it, and you look good. We had several weeks of consolidation here before the expansion. Several weeks of consolidation here. Will we expand? Nobody knows. So keep your eyes peeled and only look for entries at those high probable areas. So back to the intraday chart. We don't really care about that. We can see that we almost hit oversold or overbought regions on the intraday on this nice little move to the upside. So I'm trying to look for areas to buy right now, as we are at near the lows of this downturn, right? Through here, this is your last week's low. Last week was a pretty big candle, and this week we've been range bound. You can see that because you were trading inside of last week's candle. Whenever you are in a position like this, there is chop, sideways market price action, right? Where levels you think will hold typically, most of the time will not hold. We look to get into trending conditions because when we get into a trending condition, obviously we do much better on the P&L. But when we're just taking day trade scalps, it's all good. We can take shorts or longs, but today's red, so you don't want to be looking for shorts, especially seeing how you're coming into an area of potential support. Now, price can break down and come test this area of support. I'd be a buyer there too. And then ultimately down here at weekly support, I'd be a buyer there too. Unfortunately, it does look like they are trying to sell this beast. On the daily, you're still under the 50, so I mean, the short side has been the leading traders, if you will. They're the ones that's making the money for now. I'm still sitting in a long position from $16,000 at the yearly open. So, I mean, that position is losing money each time Bitcoin makes a lower leg, and it hurts. But at the same time, you can offset that price by trading if you use the inverse swap contract. And if you're not in America, you can do that using the Bitget affiliate link that I have in the description. You trade Bitcoin with Bitcoin, so that way you make Bitcoin or lose Bitcoin. So you can add to your position. So in a sense, your long position can be hedged because you can short the inverse swap contract with a portion of your Bitcoin holdings, a small portion, lever it up, and stick with it. So it's up to you. We'll see here if we are at a turning point. I would love to see it, but we are inside on the week, and it is Thursday. So I'm not looking for anything spectacular to happen here, but I would love to see yesterday's gains remain. I do not want to see us getting down to the low of yesterday. If we do that, then pretty much, I'll be looking to sell this thing all the way down to the weekly 21. All right. I want to talk about a few things. So in April, I was talking about Riot, how Riot had gotten to 100% or had a 300% return and was beating Bitcoin in the return as far as from the yearly open. So here's your yearly open range. If you take that yearly open price and you bring it up to where I tweeted that the high of day was 1384, 1385. That's almost a 300% return. So you don't typically want to look to start getting long after an asset has ran 300%, right? And then I had somebody tell me that this thing was going to be setting at at $80 to $100 by June, not in June, by June. So you got 9 trading days left. Right there is the 31st of May. You better get some big ass candles going here. And you only get 9 of them. So you need 9 massive daily candles to meet your expectations or your targets. So what I thought we could discuss today is retail mindset and expectations. I mean, he literally told me it will be at $80 to $100 by June, sir. That's exactly how he said it. Sir. And my experience is you don't ever expect price to go outside of its range, especially when the market, the options market, basically will tell you where that range is even before you get there. What do I mean by that? So here, if we pull up just the June, he said by June. So June 2, 2023, that's 15 days away, but that's not trading days. We've got 9 trading days left. You can see that the options market at the very most is saying that this asset could maybe hit $25. You are at 103% implied volatility. So that means you are paying a very high premium for this premium. So in a sense, if the implied volatility, say, if it just starts to range bound for, I don't know, a week or two, your implied volatility will go down. Then you will lose the premium because the implied volatility is a heavy weighting in the pricing of these options. But $25 is what the options market's pricing in by June. And that, look at the cheap 3 to 1 cent spread. How likely do you think that is to happen? I'll tell you, 90% of out of the money options expire worthless. All right. So yeah, they're willing to let you have the $25 strike for June at 3 cents because there's probably no way in hell it's going to get there. Right. And remember, you're paying a premium. When you're at 100% in the implied volatility, my suggestion to you options traders out there is you look to sell premium, but make sure you do it way out of the money and make sure you do it in a timely fashion. You don't want to go way out here at 120 days because the premium's higher, because that gives the market more time to actually squeeze you out of that position, right? Unless you're doing a spread or something, say sell the 18 and then buy the 19 put or calls, like something like that. You know, you definitely want to protect your downside risk whenever selling options, but you definitely got to be careful. So anyways, lighten up your expectations. Please do not expect crazy things like that to happen. Now, this person took trades, big money trades. All right. I hope they're here. I'm not picking on them at all. I just want people to understand that I'm not even going to look for it. But anyways, he took big money trades. I'm talking massive amounts of money that he paid for those premiums. And as of right now, unless 9 days comes and goes, I mean, I think the very first calls that he bought were like $25 calls or something. So, and that's by June. So he's going to lose a shitload of money. If he probably already has, if he bought them on the day that I said to be careful right here, simply because after a 300% rise, you're typically going to see a pullback. And then not even 2 days later, you get a stop run above the high and then boom, pullback. And then you've been trading in a range ever since. So, like, that's what you got to be careful with. You don't want to buy calls when an asset is screaming to the upside. That's FOMO. That kills retail. You want to be a professional trader, then you must learn to get in control of that junk right there. If you miss a trade, you miss a trade. Big deal. All right, so let's move on to Bitcoin. So the actual entry that I'm looking at real quick is right here, right there, literally. That is that daily res. So, right there is where I had the entry expected, but I don't like this candle here. This candle here suggests that we're probably going to break down and at the very least take out yesterday's low. So I did not take the entry. So what I'm going to do is I'm going to wait, especially now that the market's open, see if we do get at continuation to the downside. Because if you stay trading under the midpoint of this downswing candle here, there's a higher likelihood that this is just a pullback candle and the next candle will be another expansion candle. And if it takes out the low of day, which is currently setting right there, then I want to see if it gets a bullish reaction and can maintain closing hourlies above 27,171, and I'll take a potential buying position looking for the breakout. But like I said, there's a lot of sell side in the market right now. A lot of people are sellers, more sellers than buyers, obviously, at least up around 29.5. 29.5 is where we have massive supply. And as long as we're under that price, it's going to be difficult to get above it, right? This is that massive supply that I'm talking about. It's the first time in Bitcoin's history that it ever put in a yearly supply candle. Ever. It has never done it before. Even if you look at the BLX, you've only had 3 bearish years on Bitcoin's entire history. 1, 2, and then 2022, which was a doozy, right? That's a doozy. So you've never done it before. You've never made a supply zone. That would be your supply zone. But I mean, on a yearly basis, it's just a level, right? It's just a level where people would be looking at for entries to the downside. I don't consider that a supply zone because I don't consider there to be more selling in this candle than buying, obviously, because at the very beginning of the year, there was a ton of buying going on because you made it all the way up to 69K. Then the sell side kicked in. Then that's when the supply became a supply zone. But there is the supply zone, so you can basically see how it acted as support through there. And then once we got up above it, we were unable to maintain any kind of bullish momentum above it. So that's the level we need to get above, and we need to get above it good, like strong. All right. Here's a breakout. This is what a breakout looks like right here. You're breaking out above a supply zone. That's a legit breakout. Big, strong move through the area, and then a top close or a close near the high of day. That's strong. Here you are today moving higher. So, buying Bitcoin, as long as this has upside momentum, I don't have a problem with it. My concern is you also have upside momentum today on the dollar. And you had upside momentum yesterday on the dollar. And yesterday was a bullish day for stocks. But the dollar was also bullish. So one of these assets is lying. Either risk is lying or the dollar is. The dollar is coming into a very key level of potential resistance, being the yearly opening range. There's also another level under it, a 103.578. I'm pretty sure that's a, what is that? There is a level there because I found it this morning and I've already forgotten what it was. All right, it's a two-week demand or supply zone. That's basically all it is. But you can see this 2-week candle is very, very momentous, very, very bullish. You've taken out 1, 2, 3. So that's 6 weeks of price action you've taken out in less than 2 weeks. So there is quite a bit of upside momentum happening in the DXY right now. We also see a lot of VIX calls happening, and the skew is massive on the VIX right now. So we don't necessarily, we definitely know that market participants are hedging for a big downside move. Let me just go out 33 days and see if the skew still is bad. It's not as bad. There's still 90% implied volatility. You're 19 cents at the money on the put side. So $15 is 19 cents if you want to buy it. And then at the money calls are $3.35. So still massive amounts of implied volatility happening here. And also there is massive open interest in higher prices. Higher prices. Now, like I said, since it's got such a high implied volatility, this open interest could be people selling calls, right? Like the $31, $32 call. I don't think the VIX will be at $30, $32 in a month or, in 33 days. But it could, obviously. So it looks like, a lot of people are just capitalizing on very high implied volatility. But you can see at the money calls are very expensive. So you better be right on direction if you're buying premium that's above 50%. Always keep that in mind. If you're going to be a buyer of premium, that's long option strategy, buying premium. It doesn't matter if you're buying puts or calls. It is still a long options strategy. You should do it when the premium is under 50%, not over 50, because you can lose money just by the simple fact of price being sideways. As far as Forex goes, this week has been completely annihilated for me because I did not expect such a volatile move to the upside on the dollar. All right, so basically everything that I was looking at has been scrapped. Aussie dollar tested its yearly opening range to perfection, and that's where you found the sell side. Boom, 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 boom. There you go. I did take a short on the pound dollar up here at this white line. So far, that trade is still working out tremendously well. So, yeah, other than that, that was essentially just a hedge play. Because on the other, I have a long bias on risk. And I have had a long bias on risk since we topped out in inflation at 9.1%. The next month we rolled over. I pretty much said then that was the high and would probably be the low of the marketplace. That's why I started getting long. And so far I've been right. So yeah. A lot of consolidation, a lot of chop. If you guys want to trade this, trade the ranges. All right. Don't look for breakout potential. You trade the range that the market has given you. If you trade the ranges, You will be much better off. If you wanted to be a seller, you should have been a seller up there, right? Because that's resistance. You always want to sell at resistance, and you always want to be a buyer at support. So this is support for now, and it is currently still holding. But like I said, there's 10 minutes left on this hourly, and you haven't really gotten any meaningful push yet. So, it's probably going to roll over. Yesterday, we were watching it. I had a long and a short bias yesterday on it, unfortunately. Once we broke down below weekly supply, because you could see how it was holding support, but the bounces were getting lower and lower. So, once we broke down, I was looking to get short on this, but I missed the short trade, and I was unable to get long also because of what time this took place. All right, I'm usually done by 10 o'clock. We're not looking for entries, but you can clearly see that it just made a run below that low. And then that's when the bullishness kicked in. And then when Biden came out and said that they would reach an agreement for the debt ceiling, that we would not default, then all the markets fired up to the bullish side. But there's still a lot of people out there that think that, this will probably ultimately get faded. If you are one of those people, then you are looking to sell resistance. Current intraday resistance is at 27,293. So you would be looking for price to get up there. Well, that's 5-minute chart. Never mind. Forget what I said. Up here is where you would need price to go before you could look for selling opportunities, because this could potentially hold as support. I don't like this kind of price action, but it's the type of price action we've been seeing. Big downside candle right here. So it looks like you're going to see downside continuation and instant reversal back to the upside. It is very difficult to trade this. All right? Very difficult. But if you stay within the ranges, you can do pretty damn good. Right? You got above your resistance here, but then you fell back under it. Short, stop, target, next support. Boom, 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 boom. There it was. Right? Then you stopped all those people out that got long here, right there. And then where did it go? Boom, right back to daily resistance. What happened? The seller stepped back up. Boom, 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 boom. Right back down. So it's this point when we lost this that I was looking for downside continuation. But you can see what happened. It reversed and went right back up above daily resistance. So here we are. New range, right? We got a new range for now. If you lose this area at 27,171, where is your likely target? Down here. All right? That's your likely target. It doesn't mean that it will happen. It's just that's the way we trade here at, on this channel. This is the way I teach you guys to trade. You find your daily resistance levels. Right now you have a daily resistance level right here. So you can see how you're basically trading inside of daily res and old daily res, which is also a supply zone or demand zone, apologies, because you had this downside candle and then boom, a bullish engulfing. So we would look for bullish continuation based off of that candle alone. We look at the last 3 days, you can see that you've been more bullish than bearish, closing up 2 of the 3 days. So we're looking for continuation here. We just don't like the way the price action looks. So let's see if we get a swing low, a new swing low, a swing under the daily low. And then if we get back above 27,165, we could potentially take a bullish entry and we can mark whatever the low of day ends up being. If we get a big candle, slice right through it and continue, we will not be looking to buy it. We will have to set on our hands. All right. So that's what we're currently waiting for. We're waiting for a new low of day As of right now, the low of day is 27,152 spot oh 05. That is on the Coinbase data feed. On the Bitget platform, pardon me. Well, on the Tether side of the Bitget futures platform, the low of day is 27,142 spot 0. And that level or that price is still intact. So we will see there if we get that new low. Until then, let's go look at a few stocks that are breaking out. Like I said, Amazon breaking out. I mean, that is a breakout, ladies and gentlemen, right? If you're going to take out the liquidity and reverse, you would see it happen like that. That's exactly what people did. They sold into that expecting it to be a liquidity run, and then they were wrong. The market gapped up overnight during the Asian and London sessions, and then anybody that got short here was stuck until price came back here. Then if they were smart and waited and exited their position here, then they were able to get out with a minimal loss. And then look how big of a reaction you got from that. So that's how it works, right? Your shorts, they were basically getting stopped out. That creates buy side liquidity. The market pushes higher. And then today you gap up higher. So you're moving up. Now eventually I do expect this to run out of steam, just like you did over here when you got massively overbought. But I don't look to short it at overbought until I get a clear sell signal, right? Because as of right now, and since January the 1st, this thing has been bullish. You don't look to sell bullish assets. Apple probably going to break out, if I had to guess. It does look like it's rolling over, so if it doesn't break out soon, then you could potentially see a pullback down to 169.82-ish. AMD, strong reversal. Up, boom, up. What else was moving higher this morning? We have NVIDIA, another breakout, strong breakout to the upside. This is the level we were watching for rejection. We did not get it. Instead, what we got was a massive breakout. Now, you do have a bit of bearish divergence starting to play out here on the daily, but in my opinion, I think weekly divergences are better than daily divergences, and you do not have it yet. As of right now, if you close here or higher, you will not have no bearish divergence. See, you are clearly above this swing high. So you do not have that bearish divergence yet. You would have to close way down in order to get it. So we're not having it yet. So we have to wait. A lot of people are building short positions. NVIDIA is just literally right at its all-time high. I mean, this thing is 10% away from its all-time high, and people are still screaming bear market. I mean, what more does an asset have to do to prove to you that it is not bearish? Like, break out, make new all-time highs, and continue? Then that means you missed out on this. You guys can go back to my September, October, and November 2022 videos, the live streams, all the way up to January, and see that I was telling people to start buying. Start buying. Because some of these things were cheap, 68% off. Netflix ended up, if you would have been a buyer when I told you to be a buyer, you would have made almost 300%. I mean, 100%. Apologies. I mean, come on. You don't be a seller down here, guys. This is when you're looking to be a buyer. You just have to wait for the breakout, or wait until, do it how I do it, wait till a support is like legit formed, and then you go with it. I mean, 4 days. 1, 2, 3, 4 days you tried to break down and close a bearish candle under 175.51. You could not do it. Right? You could have been a buyer at 175.51, stop under that candle. Same goes for here, right? Support right there. Wait till support is confirmed. Now, in this situation, if you would have bought any time before this day, you would have been stopped out more than likely, right? Because this day purged all the stops right there. And then up, right? Next support. Held up. So far, support held. That's monthly support too. So monthly support, boom, boom. You're breaking out above monthly resistance on Netflix. So bullish, it looks bullish. It looks like the bullish target for Netflix is going to be at least 385. Doesn't have to happen. It's just, as long as price continues to maintain bullish price action above resistance, then look for 385. If I was going to trade that in options, first and foremost, I would make sure that the VIX is down. Right? Like if I was going to take a bullish position on options, I want to make sure the VIX is down. The VIX is down. Then I will check the implied volatility on it. If the implied volatility is lower than 50%, then you can buy at or out, slightly out of the money. Where did it go? There it is. At or slightly out of the money, targeting 385, so you could buy 365, 368, something like that, right? And it's getting a bullish push. Facebook is another one that looked like it was going to roll over. I was watching this over here. But this thing has a massive gap to fill. Massive gap. Now, I'm not saying that Facebook is going to trade all the way up to $289, so please do not buy $280 calls 1 week out, because you will not make money on that trade. More than likely, you're going to come down here and fill this gap first. So I would probably wait for that, right? Wait for that. It doesn't mean it'll happen, because I don't know what price will ever do. We just use objective price points to take entries. Sometimes we win, sometimes we lose. Microsoft, right at a liquidation point. Swing high is 315.95. The high of today, 313.7. Oh, that's the low. 315.86. So just barely under. Just barely under. So if it closes under today, you'll probably see a bearish day tomorrow, and then the next day, boom, you'll go up and get it if you don't take it out today. Yesterday we were talking about the XLK. I guess I said short it. I don't think I did, but I might have. But I mean, it's bullish. This is the level I was watching Tuesday, right? Remember what I said? As long as you start to reject up there and hold resistance, then potentially you could look, but you're buying a bullish asset. Well, clearly that did not work out. Yesterday, broke out. Today, continuation. So next area of liquidity, the run is right there, 161.55. As you've taken out all weekly highs except that one. So it could find resistance somewhere right in there. For instance, 157-ish. That's going to be a weekly supply zone. So we'll type weekly supply or WSPPL. That lets me know it's a weekly supply area. So price could get up to there before it rolls over, but ultimately people are probably going to be looking to buy it. I mean, the only thing that's keeping all the money on the sidelines right now, still on the sidelines, is the S&P 500. And I'm going to tell you something. If it gets above $4,200, you're going to see a lot of buying come in. Because A, you're going to be running shorts. I showed you the other day that there's more shorts right now inside of the S&P 500, the E-minis, than there was back in '08. Right here is your '08 bear market. That's when managed money, big money, there's firms out there that has billions of dollars under management. That's when they were short. This is where they currently are now. So managed money firms are more short on the S&P 500 E-mini futures than they were back in '08. All right. So that would be fuel for the fire. Same goes for Bitcoin here. This is the CME futures contract. That's the only place you can get COT data. You cannot get, there is not a commitment of traders report on Bitget's exchange. All right. So the only way you can get this COT data is on futures. And so this is the CME. You can see that managed money firms started to get long basically when I was telling everybody and their mothers to start to look for long positions, even in spot, when we hit the undervalued region of the MVRVZ score. That was right in here. That's when we finally hit it. That's when I became bullish. So I was bearish from here to there. Then I flipped and became bullish. COT shows you that people were buying, but then ultimately the FTX debacle caused most of them to capitulate. Now they're net short. All of this could add fuel to the fire if we get a bullish breakout, because those money managers are going to have to close those positions, and that'll just add more fuel to the fire. They're not always right. All right, so going back to that, let me show you. Here they were net short 2012. Look what happened after, right? Super massive bullish market from 2012 almost to 2014. So they were net short just before 2012. So they probably started getting short right here when you had that big weekly breakdown, looking for downside continuation, looking for this to be a lower high, a similar situation that we're in currently right now. Here's your big breakdown. This is a lower high, right? They were net short, but they were wrong. And then you had a 2-year bull market, and you can see how they were closing those positions quickly. Follow that green line. Then they got bullish, right? So they're not always right. Here they were net short, but it looks to me like they were net short at the lows. So they were actually starting to be less bullish coming into the pandemic. And we were becoming bearish coming into the pandemic. Because if you remember, there was about 2.5 to 3 months that we knew the pandemic was spreading across Asia and then starting to hit Europe. We knew that it was only a matter of time before it hit America. So, I mean, we were at that point, I was still a big part of the CTM community. We were gearing up for shorts. We were looking for shorts on Aussie yen and stuff like that. We nailed that trade. We also became buyers of Bitcoin when we drop 50%. So that's the pandemic, but they're not always right, is my point. All right? They're not always right. So all we need is a boom, something like that, right? And then it's just off to the races. You'll see new money come in. They'll start buying it up, basically saying that, the bear market is probably not going to happen. The soft landing scenario would be this is the low, right? That's your soft landing scenario, or a no landing scenario. Hard landing scenario is fresh new lows. So people have missed all this. They've missed all this because they continue to be bearish. They missed it all. They missed all these gains. And on Bitcoin, what a fantastic place to buy. The yearly open. I bought on June the 1st at daily support. Daily support right there. That is December 31st. That yellow line, pretty much my entry. Price got under support. Once it got back above support, I started buying hand over fist. I bought with all three. I bought with BTC Tether, BTC, or the main account is the Coin M futures contract. That is the inverse swap contract, and then the USDC account. All three accounts. I was just buying, and that ended up being a fantastic move. And then here we are now. So considering how far we came, looking the fact that we're just in Q2, all right, if you look at Q2's candle, this is Q1, this is Q2. There's 1 month and 13 days left on the quarter. You need a big bearish candle to even become bearish. All right, this looks like a pullback candle, doesn't it? It's a very small range candle. Considering that just also shows you how tight and choppy price has been for the last 2 months. Been sideways, baby. Very small monthly range compared to the 2 monthly ranges before. So this is being looked at, in my opinion, as a pullback. So we do want to be a buyer at supports. Here lately, it has not been the trade, right? Buying this daily support, ultimately you'd lost money if you stayed in it because it broke down over here. It became a buying opportunity, but it ultimately broke down. If you'd have tried to buy any one of those supports, you would have lost money. This, you would have lost money. That, well, you might still be good. This wick probably got you, though, because that wick took out that swing low. So we'll see how it plays out. We got a whole new hour, and we still are not breaking down. In fact, we made a higher high on the hourly from the last hour. So now we'll watch hourly supply. Demand, apologies, and we'll see if we close an hourly under it. So far, we have not. So we can watch this and use that as our risk, but this still doesn't look very bullish. That was a nice candle. Let's see if it completely reverses it like it did over here. So let's not get too quick to jump into this thing. But you might not get a test of 272.224 as the US 100 is still climbing. The dollar is climbing too, though. See, that's when it makes stuff difficult. You got markets, they're just all crazy right now. They're not inverse to one another anymore. Like every asset is doing its own thing. That's because money is rotating in and out of all these assets. My opinion on the dollar is people are hedging for the downside. That is my opinion. I could be absolutely wrong on that, but that is my opinion. My opinion is people are hedging because they got in early like I did. So they are looking to hedge their positions by buying VIX calls and buying the dollar. But the VIX has not done anything yet, which is very strange to me. I figured by now this thing would have already exploded to the upside, considering how much the skew has been, to the call side. It just seems like this thing would have exploded in price by now. But it could still. I mean, ultimately down here is going to be that demand zone. So as long as you're above that, there's still a potential for a rise in price. Quiet bunch this morning. What are the purple and the red, please? What's the purple and the red, please? The blue and the red? Yeah, I guess that would be more purple than blue. This is retail. Blue is retail. That's your retail traders. And then the red is your market makers, dealers, brokers, dealers, stuff like that. The red line, they are delta neutral. That means they do not care which direction the price goes. All right. Here is the CME group so far. We got a month until we get the new FOMC, but right here you can see that there's a 61% chance that they're gonna pause, but this is moving up to 39% chance saying that it's gonna go up. It just depends on the data that we get. Like, what's the next unemployment look like, right? If we tick lower on unemployment, then they'll probably hike again another time. But there's a lot of people out there that think that they should pause where they are right now, so that way they don't further cause destruction to the banking sector. Bitcoin's pulling back. Let's go back to Bitcoin. Right there was the test and I missed it. So we could try to buy it here and just use the current low day. I don't like to chase price, but that would be my near-term target. Let's give it a second here and see what happens. I hate watching the 5-minute time frame. We got 42 minutes left on this hourly. And it did test the midpoint of that breakdown candle. And that's where it rejected. Not quite. It rejected well before it. So you got the midpoint is setting roughly right at supply. So that would probably be my target. But I would like an entry here, as that would make the risk to reward better. Obviously, it's still a very, probably not even a trade worth taking, actually. Yeah, it's barely a 1.5 to 1 risk to reward. That's just where I would take profits. I would leave a small portion on for any upside continuation, but we don't ever expect the upside continuation. That's why we take profits. That's why we have entry, stop, and a take profit before we ever enter a trade. That way we know we're wrong. If we're wrong and we take profits, and if we do get the breakout, that's just icing on the cake. And who doesn't like cake? As far as my USD short, I took the USD short via this asset, USDJPY, and you can see that it has made a higher high. So I am going to close a lot of that position because it's been sideways since it made the low here in January, and we're 5 months in. So 5 months, this thing has literally traded sideways to up. So if it doesn't reverse soon, and there's no reason for it to do that, but if it doesn't reverse soon, I am going to be taking that position off. I will give it up until this weekly close, maybe next week, because this weekly can close above that swing high. You've already liquidated pretty much a great deal of weekly highs, and you're still trading well under the 50% range of the entire downside move. So like on a longer term scale, we would be looking for something like this. Right? Longer term. So I don't know yet. I'll see. We'll see. We'll see how this week plays out. Does it close above that wick high right there? Because the next wick high would be there. So let's get rid of all this stuff down here, as it's going to muddle up the chart. We just want to know where we currently are. And then we can see here. All right, good. So the next monthly liquidation is all the way up there. So this is where I would expect it to roll over, right here. If it's going to roll over. Good, nice push up above that. As your next monthly liquidation zone is all the way back up there. And it's not going to get there, not in a month anyways. This was a 500 pip move, and it happened in the span of like a day and a half or a couple days. Big ass downside move. That one red day there was 564 pips this day. That's pretty blow offy. So I think it's still, I mean, the risk is now to the upside, unfortunately, because you're above your opening on the year and you're also going to be above the weekly 21. See that? So this would be considered consistent with trend change. That would be consistent with a trend change. But in a choppy markets, the trending indicators are useless pretty much. So we'll give it another week or two just to see if this ends up getting faded next week. Because next week you could have a bearish engulfing to the downside. Because right here's where the sellers are going to step up if they are indeed sellers on the USDJPY. We can see that. I can't really pull up. My favorite tool used to would be the sentiment meter on Forex.com, but I promise you it's going to say that sentiment is, that retail is shorting this. Retail always tries to short the tops. If someone could pull that up in the Discord, I'd be delightful, because I still can't pull up daily effects. Like, it's been so long since I've pulled it up, it's already forgotten about it. See this right here? This is what I do not like. I do not know what this is. It says USD JPY is bullish. So that means that probably retail is shorting it. Let's see. It's not going to give me the actual thing. We can look at the Japanese yen, I guess. See, right here it tells you the red is commercials consisting of producer / merchant, processor, user, and swap dealers. That's the red line. We don't need this one either. So money managers are net short on the Japanese yen. And this chart looks almost inversely to the one we just looked at, right? So if you were to flip that and flip this, that would mean they are net long on USD JPY. So let's go and look if they're net long on USD JPY or if USD. Yeah, they were, but you can see they've lost interest and they really haven't got that interest back yet. And retail is barely long on the USD. Money managers are a little bit long, but not as long as they were up here. So I might still hold on to that. This could literally get sold off. Japanese yen, this is the futures, what we just looked at. Commitment of traders saying that they're net short. And we're on a weekly chart. There is a weekly liquidation, and that would be a monthly liquidation. There's another monthly liquidation right under it. So we could see prices get as low as 723.90. But that's probably where you're going to rotate, and then that's probably where demand will step up. Price will go up to look for resistance. All right, back to Bitcoin because it's appearing as if we might have missed that damn move. Yeah, see, I would be taking profits just then. So, oh well. Damn it, man. Look how beautiful of an entry that would have been. Boom. Boom. See? That's based off of your Heath level. Heath level. Price traded inside of it. We don't look for the breakouts because we don't know that it'll happen. And we don't chase price. So definitely don't buy it up here. This would have been the only opportunity right there. You had 5 minutes. And I was chit-chatting. Probably on another chart. Didn't even see that. That's where I should have had a limit buy situated. But I was also expecting it to go down and make a fresh daily low, too. So it is what it is. Ethereum doesn't look as good as Bitcoin. Well, it's not going to be perfect, is it? There's a long ways to go. This thing is struggling at this old resistance level right there. Yesterday, Ethereum did close above that level, but that level is so old, I wouldn't even be using it anymore. But you can see how good it held. I mean, test, breakdown. Boom. So, yeah. There's a lot of sellers happening, going on above this area here, where they're trying to continue, get that continuation play. Got to go take care of business. We'll be back with a replay crew. Love your thought. Waiting for Brandon to add a new few videos too. Yeah, I don't know why he hasn't been. I guess he's been busy. I think he's been busy doing a few other things other than, what he does for a living. What's up, Ahmad? Silver is hitting yearly open. Can you check? Yeah. It looks like it's under it, my friend. Yeah, that's your yearly open right there. You're already under it. You bounced off of it for one day, and then you got, boom, broke down. But we got a couple levels here. That are literally nothing. So this is just an old demand. So when I get in situations like this, you can look for price to stop potentially there or here. But I couldn't buy it where it is now. I need it down here, right? It doesn't mean price will get down there. There's just a higher probability that it will than just stop right here in the middle of a range. You got an old support over there, but so actually it could hold there. This is the lowest support though. Typically we go on the lowest supports unless it gets confirmed as a trap, and it kind of sort of was. So this would be the support that we would have to look at. That's where it's bouncing from currently, but I don't like that level. And since you're coming in hot, like with quite a bit of momentum, I would want to see it get here, and then I'd want to see it, kind of get that. But you're starting to get a little bit stretched out. Maybe wait for bullish divergence on the RSI before you look to be a buyer on silver. Silver and gold are going to, as long as the dollar is going up, they're going to struggle. Right? The dollar was getting ready to break out of an all-time high. And then the dollar gold was getting ready to break out above an all-time high. And then the dollar went and got bullish. Lots of divergence. There was 3 drives of divergence. 1, 2, 3. 1, 2, 3 drives of bearish divergence. But that's played out, so find the higher time frame support, you're under it. So it looks like you're probably going to be taking out last month's low, or that's where you would stop. You would probably take it out, but that would make you a bearish engulfing on the monthly. At resistance, but at an uptrend. So I'm looking for the dollar to be faded, potentially. So we'll see if it does or not. We'll see if it does or not. The setup's not as clear on the dollar as it is on, say, the USDJPY. It is so crazy how you were all the way down here, and that's where you broke out above the 50 on the monthly, and you're retesting the 50 on the monthly all the way up here. You're bullish, not quite a bullish engulfing on the monthly. Definitely a bullish engulfing on the weekly, 2 weekly. It's a lot of momentum, but a lot of momentum was here too, and it got sold off. So hopefully the same thing occurs. I know this is where I'd be a seller. Yeah, Bitcoin's going higher, so we just flat out missed the entry on it. Hopefully somebody got it. Just flat out missed the entry. And you don't get any better than that. I mean, I'm telling you, these levels, guys, they mean everything. They mean everything. It's just you're not always going to have the right directional bias on the day, right? That's where we get screwed up. The levels, sometimes they don't hold. Like you didn't hold here, but you know that's an area that's where you're looking for long entries if you have a long side bias based off the Heath level. He made higher lows each time. Boom. That's daily resistance. They're definitely not looking to get long there. Will I short it? No, but you could. I mean, that's daily resistance. And nobody knows what price is going to do. So you could short it if you think it's going to continue lower. And like I said, these things have not been trading with each other, so it makes it difficult to look. Look at that. Freaking A. Come on, baby. You can do it. You are now trading above daily res. You can do it. I got faith in you. Climb, biatch. Climb. Why didn't y'all buy that damn thing? Why didn't I buy it? I got too much stuff going on, man. VIX is getting slaughtered. Sometimes I need you guys, my few ledges, to let me know when the level that we're interested in buying is being tagged. We should have just market ordered into that thing when we looked over and it had just been hit. Well, wouldn't that be amazing? Being able to do stuff in hindsight. That's not how it happens, though. So there's a big level right there, and you just took it out. Just barely took it out. And this thing's been screaming all week. There's Monday, Tuesday, Wednesday, today, Thursday. And that will be a higher high, but it needs to be able to maintain strength above it. It can't just take out the liquidity and roll over, as we've seen that happen far too many times. Like, for instance, here, bloop, down. I'm not suggesting that is going to happen, though. USD CAD was a perfect opportunity yesterday. It still is today. There's daily res right there. If we can get a closure under that daily res and come back and test the hourly Heath level, that would be a short opportunity on USD CAD. Stop will be above this swing high. That price is 1.34992. Remember, you got to close under it. You got 20 minutes left. You got to get under it. And then the next hour, you want to see it push up to there, tag that, and then go. That's USD CAD. AMZN, that trade the other day of buying 113 or 112 puts obviously would have failed. Would have failed brutally because you're trading at 118 right now. Today's trading a little bit like all right, so here's the open on the 5-minute. Here's yesterday's close. Oh, what was I looking at? I was looking at the hourly, wasn't I? Yeah, I was looking at the hourly. For a second there, I thought that was the daily chart. That's what I was getting confused about. Let's go look at Tesla. Tesla had a good day the other day. Wednesday. Yesterday. So you've set a low of day. Here's your open. You didn't really do nothing. No gap, really. You closed right here yesterday. You opened right there today. So not really a gap there. You set a new low of day. You set a new high of day. Let's see what we got on Tesla. On the call side, let's go 15 days out. It still does the $2.50. That's what sucks about it. You can't just buy 176 calls. You gotta buy 175 calls. That's at the money. Yeah. I think I would buy 175 calls 15 days out. But it's it's gonna be $590. So that's a pretty big risk. You'd have to have a big portfolio to do that. To make that 1% of your total net loss. But you could always close it. You know what I'm saying? You can always sell those calls back to the open market. So you could set it like if you pay $6 for the call, if it gets down to $4 or something like that, you could sell it, right? If you wanted to. That would basically save, that would be managing risk on it. If for some reason it doesn't continue to the upside today. But I think that would be an easy 175. I mean, you're literally close to that price. You've already hit 175 today. And that's looking for the gap to fill. So if you did get up to 178, that would put you almost 3 strikes in the money. And as of right now, that's double. That would be double the investment. That's if it closes that. But the gap's pretty much closed. That wick right there and this got it. Well, that got it. Even if you look at that. So the gap has been closed. But I think this was a bear trap. This looks like a bear trap. Their support, you broke down below support, checked it as support, and then boom. I think 175 calls would be a good bet. 560. Obviously, the lower it goes today, the cheaper they will get. Buy them 15 days out. June 2nd. That's the expiration I'm looking at. That way it gives you, a few days to play around here and then ultimately break out. But you can manage that risk simply by watching the premium, the price of the premium. The open interest on that exact strike is pretty good, 5,200. And also your implied volatility on that expiration is 46.51%. So you're under 50%. It meets pretty much all the criteria. But 175 is exactly where it rolled over. That 5-minute candle right there closed at 175.05. It's 1046. If you make a new low of day at 11 o'clock, then there's like a 65 or 70% chance the higher low of day is in. If you make a fresh daily low, that could mean that the high is in. But as long as you don't get under that, there's a good chance that your low of day is in. BTC just dumped a daily support. Yeah, but our trade would have paid. We would have made money. Like I said, my entry was hit, or my take profit was hit. So I mean, yeah. That's why you take profits, guys. Daily resistance and then sellers just boom. There's definitely a fresh low of day. Oh, we had no way. No way. That was at 10 o'clock. Existing home sales was a miss. We have 4.43 million, 4.3 million, 4.28 million. So there's a trend lower and lower on the home sales. Everything's at highs. US 100 is still at the high, but it could ultimately roll over. Bitcoin's been trading on its own merit. It would be an insane trade to take now. But your low of day is there. So you could use that as your risk. But wait for it to get back there. That's why I always say to take profits, because you never know if you're right on your daily bias when you enter the trade, let alone, you know what I'm saying? Like, it's impossible to know which way price is going to go. That's why you have to have a strategy. The strategy consists of waiting on the higher probable areas to take entries, and then you take your profits at high probable areas again. That way you can be on the wrong side of the daily range and still make money. There's been so many times where I've made money and I was on the wrong side of the market just because I bought at a high probable area. Price went up to my target. I took profits, moved my stop to break even, and then an hour later was stopped out as price continued lower. This is just an hourly supply zone. That's an hourly demand zone. This is daily res, and this is daily support. Five-minute closures do not matter. Hourly closures matter. Right now, hourly support is right down there, just above daily support, which is resistance, by the way. It's just a demand zone. It's not even daily support. Daily support is down here. That's a good place to look for to be a buyer. Always daily supports. Did you buy it on mountains? Low of day is also daily support. No, that's your low of day right there. Right here's your daily open candle. So your daily open candle is the high of day. That's the low of day. This is daily support. That's daily support right there. This is a good spot to watch. Maybe later on today it gets all the way down there. That's okay as long as it stays above it. We don't want to see it closing, bigger time frame candles like 2 hour or 4 hour candles closing under daily support. That's a nasty looking candle, no doubt. No doubt. Fresh low of day just made it, isn't it? Yes. 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 That is now the low of day. But that was the low of day. Until that just happened. That one big spike. See, this is your London session. So your London session did make a low of day. I've told you guys that a million times. You Londoners, you guys that trade during the London session, 2 a.m. Eastern Standard Time and 3 a.m. Eastern Standard Time. Literally, if you're at the low of day or at the high of day, you can just take the reverse side of the trade. Make sure you use a pretty wide stop. Only risk 1%. There's a high probable chance that you're going to make money. The London session sets the lower day a lot. Lower high of day a lot, like a lot of the times. It didn't this time because the New York session just made a fresh daily low. So that tells us Asian session made the high of day, London session set the low of day, New York session set a brand new low of day. So the daily range is trending lower. You did not take out the high of day here. That's your high of day. No, that's yesterday's high. This is the high of day. Right there. Yeah, that's yesterday's high of day. This is today's high of day. And that did not quite get there. They just sold daily resistance. See, I'm not the only one that trades this way. They just had limit sell setting right there. Boom. High of day stop. They took profits, I guarantee you, at daily support. Because that's the range. Beautiful, 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 beautiful. We'll keep this one. There's a slight gap down. Weekly support stays. That's where I'd rather be a buyer, but I don't want to see a daily close under this either, because that could infer that the near-term trend, which is obviously down, they're just trying to sell the swing high. Sideways. I'm still holding a long 26,589. So right in there. Nice. I hope you took profits. Yeah, already took profits. Good job, man. That's all. That's how you do it. That's it. That's how you do it. You said 589. So did you buy this low? I don't see a reason to justify buying that low, but you did it. You probably bought this low. This took out that, and you probably bought it as soon as it got back above it. Or just bought it expecting it to be a stop run. Which we do that sometimes. I just don't suggest doing it unless it's on a news day. Yesterday, the Biden, but it wasn't like a scheduled news day. Liquidation of the hourly range. Good job. Good job, my friend. That's how it's done. That's how it is done. Profitable trade right there. Now, all you got to do is wait for the next high probable area. Don't consistently do that, though, please, because you will, this won't work as much as just trading the ranges. I promise. Right. Just look at this. You got this. This is yesterday, not yesterday, but Tuesday's open and close right there. So if you're looking at the hourly time frame, hang on, I lost it. It's not a big trade, but price will consistently stay within them ranges. Like, gives you opportunities just to trade from line to line. And then now look at today's range from yesterday. Yesterday's close open. Yesterday's close. And then today, boom. And you did it in 1 hour. Up to yesterday's close, down to yesterday's open. And you can see that play out so many times. Here, if you had got short there, you would have wanted to take profits early. Now, I'm not sure if this went up and stopped it out. That's probably what happened. It probably opened here, ran up, stopped you out, and then ran down. It's just difficult trading. It's very choppy. Very choppy. So the bigger ranges are the better ranges to operate in. But clearly, when you see an expansion candle like this, you're not going to be looking to operate in that range. Right? You're not going to be looking for the next, because that was obviously a big ass candle. So you're not looking for the next day or the next week to go all the way back down and retrace that. See, there was very difficult trading the 3 weeks after that because your bodies were not really consistent. But once you made this candle, you did have an opportunity. There to there. And clearly that has been the short. Since that high week was made, that high close, that's been the trade, the short on the high close. Now we're looking for the buy on the low close. But so far it's not working out. So like it might be next week before you get another opportunity to buy this price. 26,929. Depending on where this closes. Now if you close this week Sunday under that price, then you're not going to be looking to buy that price. And as of right now, the way this is situated, it is looking more and more like it's looking for downside continuation. And I quit being bullish on Bitcoin once it gets to there. But as far as day trades go, I'm consistently looking for trade entries. But I just haven't seen anything that I loved in a long time. This right here really threw me off. This day threw me off big time. This was a very big range day, both up and down. And then the very next day, you had a big push higher, but never did liquidate that high. And then you went down and then back up. So, I mean, it's been very difficult. This is the first time that you've actually seen a consistent run lower. Some people would trade that as an M formation. I don't trade formations and I don't like trading breakdowns. Because where do you put your stop? If you enter a short on a breakdown, right? Say you get short there. Where's your stop going to be on this day? And then where are you taking profits? A measured move of that would be this, right? So you did get a complete measured move of that breakdown of that information, but this right here stopped most everybody out that took that short breakdown. Unless they had their stop above that candle's high, then they were safe. There's so many different strategies and stuff, man. Just stick with the easy trading, the easy style, right? Look at your higher time frames. Look to trade within the ranges. Who's hitting me up on Discord? Oh, gotcha. So there's a couple people in the Discord that made money on that down move. That's good stuff. A lot of stocks are still up. And then let's look at the. This still looks good. This is the one that I most care about right now because Bitcoin is mostly correlated to this one. So this is doing good. If it stays like this, you're going to see a bullish day. The S&P 100 not so bullish. Like all this big square right here is the S&P 100. This is the S&P 500. Or all of this is the S&P 500. This little down here is the Dow Jones. To there, then that's the Russell, which is mixed. Yeah, a few stocks. Netflix is up good. Synopsis is up good. What's this? Synopsis, Netflix. Take Two. They're up good. TTWO. Yeah, they're up good. That would have been a buying opportunity on the lows. Having a strong week. Actually, it's just a strong day. It literally just today gapped up on bad earnings. I would be very, very cautious about buying that. In fact, they do have options. Oh my God. And 15 days out, 28% volatility. So this thing is cheap. The puts are not, though. So you see this right here? This is on bad earnings, a big gap up. Why? Liquidation. You even liquidated that. Look at the weekly. You liquidated that week all the way to April. You liquidated on bad earnings. So if I bring this back over here and look, this is 15 days out. Look at the difference in price at the money. Well, it just changed. Well, anyways, 135 puts. That's cheap. I don't know why it's not giving me the volume or the open interest. No open interest on it. It should be. But I would look for that gap to fill. A big boost on bad earnings. But it happened here too, but it gapped down on bad earnings. But then the next day had a big bullish push. This is exactly the opposite. Gap down. but ultimately closed the gap. So I'd say in 15 days, you'll at least close a portion of that gap. And like 135 strikes are cheap. They're $1.16. And then that, you've already hit 135 today. So there's a good chance that in the next 3 or 4 days, you'll hit that price again. And then you'll be in the money. And right now, if 135 puts were to get in the money, you would double that entry. Like, you'd make at least $220 on the call, on the sell. Probably more, depending on how fast it happens, because you will have time decay. But 15 days, that gives you 15 days to get to 135. I like that trade. So let's mark it and see if it pays. Oh, it's here. All right, so you just need to take out today's low to be in the money. That's June 2nd, 2023's expiration. 135 strike on the put side, not the call side. On the put side. $135. That's a $1.17. That's $117. You could risk $117 to potentially make $200 in 15 days. I think it'll happen. We'll leave this on the watch list just to check and see if it does. If you don't want to lose the entire $100, all you got to do is sell it when you get to like 60 or 50 cents. If price continues to run higher in the 15 days, then obviously that premium is going to decay based on delta and based on data. So, yeah. Right there's where we need to get to be in the money. And by this time right here. So we'll keep this one on watch. We'll take it off watch when we... Look, it's right there. Boom. Amazon was a bad trade. It didn't work. Oh, love it. GJ making new highs. Palantir's doing good. Yeah, it is doing good. I wish I would have bought that a couple days ago. It was being talked about on CNBC a couple days ago. Or not CNBC, Fox Business. I can't remember the guy's name, but he came on and said there was a lot of call buying going on in this one a few days ago, and he liked it up to $13. But he's expecting a breakout. See, I don't expect breakouts. I try to keep when I buy options, I try to keep them in the range. It's about to hit Heath level 1162. Palantir 1162. I don't know what time frame you're looking at. Or which one. I mean, this would be a Heath level, but it's not 162. It's like, I mean, 11. It's 1170 or 1180-ish. unless you're using the low of that candle, which you can. But I like the bodies. Did you look at DXY already? What do you make of this? Any near-term targets? I think I might unload some USD. What it take to get bullish? I wouldn't get bullish on the DXY right now, Run DMC, because you are coming into the 2-week level. Jesus, what a day this thing is having, man. This is something strange because you're having a good day on this too. This is continuing to go up. This was at like 0.7% earlier when we looked at it. Now it's at 1.27%. So it's going up and the DXY is going up. This is a 2-week Heath level right here. This is where I would expect it to go lower or here. And I'm hoping that it rolls over, not just, right here ends up being the high of day and then it goes down. I'm hoping it actually freaking dies. I'm hoping it dies, but it doesn't look like it. I mean, that's a lot of momentum today alone. So there's a lot of hedging going on. I like to take 2 short. I think that'll play out. Yeah, DXY. I mean, this is a very big bullish day. Not as big as this one, but ultimately that had 6 or 7 days of sideways chop before breaking out again. So, I mean, I want it to stay under the yearly opening range and go under, but that's a lot of volatility. That's a lot of momentum going to the upside there. It's not to say that it can't get the same amount or more momentum going down too. Like in 4 days, you could wipe that entire range out. It just depends on if the sellers are there or not. Will people take profit here? We looked at the commitment of traders on the US dollar, and money managers are positioned long, but not as long as they were. So for it to be getting as big as a pop as this, retail is like neutral. Oh, yeah. See, they were short here too, and they were wrong. But they started buying it up through there. So it doesn't always mean anything. I'd like to see this tick lower this Friday, and that would suggest profit taking, and then new short sellers jump in on it just because it's under the yearly opening range. It just depends on what happens next. I mean, could you take a new fresh short on USD JPY? You could, but you're selling into strength, something I don't like to ever do. Because, like I said, you might get a decent pullback tomorrow, which would be Friday, and then Monday you get a spike back up, smoke you, and then it goes. But who knows? All right, so we got a few things we're going to watch. Obviously, Bitcoin, we're going to keep that on watch to see what happens with it today. Something had to happen. I don't know. I'll look, see what happened to cause that last hour dip. But we're kind of wanting to see it hold and keep closing above support. But if we get back down to daily support, I'll probably be a buyer down there. Tomorrow, though, probably not today. We'll see how it goes. You guys have a fantastic rest. Oh, yeah. That Adam and Eve bottom thing. Yeah, I don't even know what that is. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.